Hello, welcome to our weekly look ahead at the markets. Quite a week it's been. There was no sugarcoating the medicine from the Chancellor last week in the UK as the autumn statement delivered tax hikes and real-term spending cuts across the board. Notably for investors, there was a reduction in the tax-free allowance for capital gains tax. That's coming down sharply, as well as the dividend tax allowance, which is being reduced from £2,000 to £1,000 to £500 by 2024. So important ramifications there if you are an investor, a retail investor if you like. We've also seen moves in the rates market. The gilts were pretty steady last week. We did see some movement on the day of the autumn statement, but there was, after the autumn statement, was actually a US-led spike in the shorter end of the US yield curve. Markets anticipating that the Fed will need to maybe go a bit higher. There was some pretty hawkish commentary from James Bullard, the St. Louis Fed president. He's been a very hawkish member lately, but he underlined the fact that the Fed has some ways to go. Messages from Mary Daly at San Francisco Fed, Esther George as well, all sort of pointing towards the Fed needing to go higher for longer, if you like, and that pause is off the table in the words of San Francisco's Daly. So coming up to this week, and we have the tail end of earnings, not a lot happening there, but we are going to be looking at Japanese inflation figures. We got some out on Friday showing inflation was up to 3.6% core CPI. Is the Bank of Japan going to do anything about it? No, it's keeping monetary policy super easy despite higher inflation and despite the fact that this super easy monetary policy is storing up all kinds of trouble, as we're seeing here in Europe, UK and in the US as they try to unwind that super easy monetary policy. That's what's driving the damage in the equity markets. This coming week, though, we do have a huge deluge of data from the US on Wednesday ahead of the Thanksgiving holiday. There's going to be durable goods orders, home sales, also those University of Michigan inflation expectations and consumer sentiment numbers. They're always pretty closely watched. Last week, as I detailed in the morning commentary on Friday, a relatively new gauge of inflation that's only about a year or so old. That's inflation expectations, implied inflation expectations are rising and have jumped quite sharply in the last couple of weeks. That's a survey carried out by the Cleveland Fed. So those inflation expectations will be being watched by the Fed, and FOMC meeting minutes are due out on Wednesday. They'll give a clearer picture, no doubt, as to the likely path of interest rate policy. But with the Thanksgiving holiday on Thursday in the US and many traders taking the Friday off as well, it could be a relatively quiet end to the week, but expect plenty of action at the front end of the week. That's it for now. Thanks for watching.